Okay, another month have gone by, and remember last week we were looking at October. We were talking about the consecutive up month for 5 consecutive month, and will we see a 6 consecutive up month on October? And the question was, red October? Will we see red October? And as you can see, that October did finish negative. And in addition to that, we also noticed that not only the S&P 500 finished negative, but look at all these indexes. You see that all these indexes here finished the month of October in negative. So definitely that was a red October. And if we just look at the performance, the Russell 2000 has the worst performance in October, followed by the New York Stock Exchange Composite and the Dow Jones Industrial. And the S&P 500 finished almost minus 1%, and the NASDAQ 100.85%. Composite, the NASDAQ Composite 0.5%, and the Dow Jones Transportation 0.25%. If we take a look at the weekly here, we see that the S&P 500 is down 2 consecutive weeks now. And also in addition on the daily, it is dipped below this 30-period moving average, this 30-day moving average. And also notice that it is coming down to possibly test this low. So right now it is still holding this higher low, higher high, although we can make a case that it is making this, lower high, lower low. But this is the low that we'll keep an eye on for the coming week. If it dipped below this low, then we'll basically have breaking this trend here and making another, capacity could be starting a new downtrend here. So keep an eye on this, somewhere between the below the 5,700. And looking at the Dow Jones Industrial, you see the Dow Jones Industrial has already put in a lower low. It took out this low here and also dipped below the 30-period moving average. And also looking at this trend line here, seems to be have broken this trend line right now. It's kind of back testing it. So we kind of keep an eye on the Dow Jones Industrial to see would it come dip below this low and start making a lower low, lower high. And likewise, looking at the New York Stock Exchange Composite, you see that it also taken out this low and also dipping below this 30-period moving average here, along with breaking this uptrend. So once again, just like the Dow Jones Industrial, basically watching this to see is that they starting a new trend down with a lower low, lower high. And looking at the NASDAQ 100, the NASDAQ 100 seems to be still holding this low here. And but it did kind of break this 30 moving average as well. So we have to keep an eye on that. Although it seems to be, still holding this trend here. Again, basically it's, penetrated a little bit and moving back. One could make a case that this is making a lower low. So it's all depending where you want to look at it. And right now, basically, I'm looking at this low here. If this low is get taken out, then we basically could possibly see the NASDAQ 100 come down to this area. So this area will be in play. And here's the chart of all the indexes with the on a closing basis. And here's the performance chart here. We can see on a year to date, the composite, the NASDAQ composite, the S&P 500 is still above 20% gain. And the NASDAQ 100 just a little bit below 20%. It's sitting at 19%. The New York Stock Exchange Composite, 14%. The Dow Jones Industrial, 11.5%. The Russell 2000, 9%. And the transportation with a 2.85% gain for year to date. And looking at some of the key sector here, see the semiconductor, they basically, most of them is pulling back. You see the semiconductor made a little bit move up and finish the week on a little bit of a downside here below this 30. And also the oil is still kind of choppy. Same thing with the processors, Explorer, and also the retail sales is kind of still flat, still holding in this area here. So we're still waiting to see would it come back down to this 72 area. And also the biotech is rolling over a little bit. It seems like it's might want to make a little bit of a pullback down into this 140 area. And also the miner got a little bit of a pullback after gold hit an all-time high. So you can see that it's coming down a bit, but still holding strong here. I wouldn't be think about shorting the miners yet. And looking at the banking sector, we still see the banking sector is holding up fairly well, but the home builder is kind of rolling over. You see the long-term bond is still continuing to move down. So we see the interest rate is continuing to move up, especially on the 10-year yield. So gotta be careful on that. I think the market is pricing in long-term expectation of inflation here. So whoever win the presidential election, I think the market is saying that it's going to be an inflation period to come. So it doesn't matter who get elected. Let's take a look at the sentiment here. We see that the market participant is a little bit more fearful now. The VIX finished Friday with a 21.88, so it's about the 20 level. So obviously the market participant get a little bit more cautious and a little bit fearful. And also the put call ratio is about that 0.75. So definitely a little bit more hedge going on right now to try to hedge some of the downside. So although the participants are not in a panic mode yet, but they are definitely getting a little bit more cautious. And here looking at the up-down volume ratio, we are seeing a little bit more negative, and also the daily advance decline is also a little bit more on the downside. So definitely we are seeing a little bit more selling pressure this week comparing to the previous week. In addition to that, we also noticed that there are more 52-week low than 52-week high now in the New York Stock Exchange. You will notice that the number of stocks making 52-week low is start to increase a bit. And looking at the cumulative AD line on the New York Stock Exchange, we are seeing a bit of a divergence here, negative divergence. So we'll expect to see a little bit more of a pullback in the market in the coming week here. So who knows, maybe the volatility from the election will create a little bit more of a downside correction here, and then possibly after the election we might get a little pop, but that's only speculation right now. We just have to wait and see. And look at the NASDAQ market. The NASDAQ market is not as negative as the New York Stock Exchange, although we did see a couple of days got a little bit of a selling pressure here on the up-down volume ratio, and also most of the week, the daily advance decline is negative. So definitely there are selling pressure there, but not as much as the New York Stock Exchange, and that probably due to the FANG stocks. And similarly to the New York Stock Exchange, we are seeing more stock making new 52-week low than 52-week high now in the NASDAQ market as well. And there's nothing new in the cumulative AD line here for the NASDAQ. We'll continue to see the negative divergence waiting to get resolved. So overall, the sentiment is getting a little bit more cautious, and also the internal is getting a little bit weaker now. So we could anticipate to see some more weakness or a little bit more pullback into the election, and maybe after the U.S. election, the presidential election, we might get a little bit more of a directional move. So, but in the meantime, I would be cautious in terms of making a commitment on one direction or the other. Okay, let's take a look at the price action, starting with the E-mini SP500, the ES. Notice that the price came back down. Remember, beginning of the week, it was up here, and it appeared that it might be coming up to the all-time high, the Globex all-time high, but it turns out that was a little bit of a false expectation. And as a matter of fact, the last 3 days, it just came down into the lower range of the expected move. And you can see today it just closed barely above this lower range of the expected move. Now, it didn't even get anywhere close to the October upper range or the lower range. And if we take a look at the market pricing in for the election, the post-election, and also the month of November, this is the range for next week. For the upper range is 59.15, 5906.75. That's the upper range. And the lower range is 5612.75 and 5560. So you can see that it's interesting that the market is not pricing in for a new all-time high next week. So are they expecting that we might get a little bit of a sell-off on a post-election? I don't know. But basically, I'm watching this level here, the 57.29.25, this low volume no here. If we dip below that, then look for the lower range to be in play. But if stay above that and it come up and take out the 5807, then we could come up to the upper range and the Globex all-time high could be in play. So we never know, right? We could get some, post-election surprise and push us up to the November upper range, which is somewhere around the 6,000 mark. It is sitting at 59.80 somewhere, 59.90 somewhere, and between 59.90 and 59.64. So that's the upper range, but the lower range is you see that is much wider, and it is down here at 5534.50 and 54.20. So if we come down and get a sell-off on post-election, then we could see this thing come back down to somewhere around this 5,400. But if we get a rally up, then we could see the ES or the S&P 500 move beyond the 6,000 level. And looking at the SPY, the ETF for the S&P 500, you see that it also came down to the lower range of the expected move, the weekly expected move, and came down to this balance area here, this high volume zone. So you can see that it is, pretty much trying to find balance here. And interesting enough, again, it also did not come close to the October range. Now, interesting enough for the SPY, the market actually pricing in for the coming week a new all-time high because the upper range is between 587.50 and 585.70. The previous all-time high is sitting at 586.12. And the lower range is 556.30 and 552. And also you see the month of November, the upper range is between 596.50 and 594.20. And the low range is between 547.90 and 539. So for the coming week, we're going to be watching this particular level here, this zone here, to see what it break below this zone. If it break below this zone, then we're looking at this lower range to be in play. But if it break above this upper edge, then we'd be looking for all-time high to be in play. So those are the key levels to keep an eye on. We're basically just playing what the potential reaction from the U.S. presidential election next week, right? So, if it's down, then we're basically looking it to come back down to below 5,550. And if it's up, then we're basically looking for this thing to come up to, 600, or in the S&P 500, the 6,000 area. And looking at the NQ, the E-mini NASDAQ 100 future, you see that the price is inside of this high volume area here. So next week, we'll be watching this 19,928. If it dipped below that, then we could see a little bit more downside and try to retrace down to this 1900 area. But if it able to hold above this area and then push up to this 20,538, then we're basically looking for the possibility of moving up to this Globex all-time high above this 21,214. Look at the QQQ, the ETF for the NASDAQ 100. You can see that it came down to the lower range of the weekly expected move and closed above it. But it is sitting inside of this high volume balance area here. So for the coming week, we're basically watching this 488.92 and a 468.18. And here's what the market is pricing in for the coming week here for the upper range on the weekly expected move. It is between 505 and 502.60, and the lower range is between 472.20 and 469. And if we take a look at the month of November, the upper range is between 516 and 512.50, and the lower range is between 462.40 and 455. So for the coming week, once again, we're saying this is the key level to watch, 488.92. So if it get above this, then we expect it to come up, basically retrace this high volume area and get up to the upper range of the weekly expected move into the 505. And that possibly could take out this high here and put in the all-time high. Now, if it dipped below this 488.92, then we're basically looking for retracement down to the lower range of the weekly expected moves here on 472.20 and 469. And then we could see if it able to hold this 468.18. If it doesn't, then we're basically looking for this 462, the monthly lower range to be in play, and that could take it down to this 455 area. So those are the price action, price expectation that we are looking for in the coming week, because next week we have the presidential election, and also we have the FOMC meeting. They postponed it by 1 day due to the election. Instead of announcing the rate hike or the new monetary policy on Wednesday, they will announce it on Thursday. So definitely we're going to have some big price move in the coming weeks. Now, if you'd like to see more content from me, then I would suggest that you go and check out my newsletter at Substack, and you have the link in the description below, and the link is at smtraderca.substack.com. And be sure to smash the thumbs up to give a like to help promote this video. And if you are new to this channel, click the subscribe to help support this channel. And thank you for watching.